You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
All right, everybody, that music means it's time once again for Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. My next guests, we have an old friend of the program and a newcomer. Kind of a nice little combo here. We'll start off with our old friend, Shelly Brown. He is the Executive Vice President over there at the Miami Options Exchange. Shelly, welcome back to the show and welcome to the studio for the first time. Glad to see you in person, sir.
Mark, glad to be here. Thank you so much.
And we are also joined by a newcomer to the program and indeed to the network. He is Simon Ho, the CEO over there at T3 Index. Simon, welcome to the program to you as well.
Thanks for having me.
And Simon, as we are wont to do with all of our first-timers on the old program, why don't you go ahead and give our audience a little bit of an overview of your background and what it is you guys do over there at T3.
Sure. So I've been an options trader for about 25 years, mainly in banks, in FX markets, oil markets, and so on. And eventually I decided to start my own firm. We're based in Sydney, Australia. And so we run a funds management business where we run a VIX options dedicated fund. Have done that for about 8 years. More recently, though, 4 years ago, we started the T3 Index business. The idea here was for us to become the preeminent player in the creation of options and volatility-related benchmarks. So that's kind of why we're here. And in fact, I'm here with Shelly this week in Chicago to socialize the launch of our Spikes Index, which is a VIX competing index.
Our old friend Spikes, Shelly and I have talked about it many times. I talked about it back in its initial incarnation back with the Bats folks when they first had that. So we've been talking about Spikes for a while. But that said, we get new listeners all the time to the network who may not be familiar with it. So let's start there. What the heck is Spikes? What are you talking about here, Simon?
Sure. So we focus on volatility as an asset class. And one of the things that we noted some time ago, 4 years ago, essentially, when we started, was that VIX is a fantastic product. It's gone from zero to hero in just under 15 years. And it is, on any given day, one of the most actively traded listed derivatives on the planet. What stuck out to us was the fact that there is no competition for this. And if you look across global industry, you find that there are typically more than one player. So we wanted to find a way that we could come in and we could disrupt the market. We could do things to improve innovation and maybe make some amendments to the way things are done currently. And that's what we set out to do with the Spikes Index.
And obviously the big change you're making with Spikes is, VIX obviously derived from SPX options, a proprietary product on top of a proprietary product. You're going a little bit differently. You're going a little bit more multi-listed SPY options. Tell us why you went that route.
Right. So, as you said, the main hurdle to any competition in this industry is the fact that you can't use those proprietary products of the SIBO. So the only alternative that really presents itself is to use SPY, which is multiply listed. So we have done that. We've built an index that essentially in many respects is similar but does have some differences. So we use a variance swap formulation to determine the index. We use SPY as our inputs. That gives us a couple of pretty clear advantages though. SPY options are quoted typically tighter than SPX, which means that we have sort of pinpoint accuracy with our index. But also we've made some changes, and we developed an algorithm called price dragging. And what price dragging does, it's a different way to sample the constituent options that make up the index. So what that does is it gives us incredible durability in the face of fast markets. So we prioritize trade price over the bid ask. So if a market is fast and you don't have an offer, then it's very hard to find a mid. So this is how we remedy that situation. So it's very robust. What that leads to, from a practical point of view, is that we can disseminate the index at 100 millisecond intervals, whereas most vol indices are much, much slower than that.
Yeah, that's more important even, I think, with a volatility product than with other asset classes, because the reason people are coming to the party, right, is for those moments when everything is melting down, when the market is selling off, when VIX or volatility is exploding. And we've seen problems, back in some of the big movements in the past. We've seen VIX not be able to be disseminated for exactly the reasons you're describing. So it sounds like you say that Spikes is built to, like the old Timex, right? It's built to withstand, built to last. It's built to function even in those kind of meltdown type environments?
Yes, absolutely. That was the goal, and that's kind of what we've achieved. So the index has been disseminated for well over 2 years, and there was one period that you're talking about, I think it was 2015, but the VIX wasn't able to print for about half an hour. Ours was printing within a second. So
we saw a decent shock over this past week. I'm looking at a chart here of Spikes, ticker symbol SPIKE, if you're curious, listeners, to check it out for yourselves. And how was the performance this week? Did you notice anything interesting going on? How was the indicator performed this week?
It held up really well, in fact, and we were looking over a specific period back in February because a client was asking us about it, and it was very clear there that you get a fairly staccato situation with the VIX, but ours was smooth throughout the entire time, so it sort of stands up to the test of scrutiny.
I'm just doing a cursory glance at it myself here while we're talking, and it looks like people are wondering how does it line up or compare to VIX in terms of movement. Right now, the VIX cash is at about a 17.5, Spikes is at about a 17.5, and looking at the major moves over the past week, we know VIX cash got up to about a 28, and Spikes looks like it hit about 27.5. So it's not talking apples and oranges here. I think it's a movement that people, if they understand VIX, they'll be able to wrap their heads around intuitively, I think.
Yeah, absolutely. And that's one of the things, when we were contemplating the idea of building a competing product, one of the things that we wanted to do was to get feedback from the industry. Almost down to every person that we spoke with, they said, look, we love the VIX. There's many things that we like about it. Some things that we don't. So we've set about to try and address those some things. But in general, the formulation makes sense. It allows traders to be able to hedge their portfolio through replication in a nice, efficient way. Lots of things about it are excellent. And so, we wanted to make sure that we kept the good bits and we tried to improve those that were not.
What's interesting about VIX is, you're right, it's been lightning in a bottle. It's exploded. Certainly has surprised me. I think it's surprised most watchers. A product that, when it was conceived, it seemed like the most institutional thing imaginable. It was the implied volatility of SPX options. Only a major institution could trade that. Fast forward a decade and change, and mom and pop, everyone knows what the fair index is. So the success has been crazy. But even to this, as long as it's been popular, as long as VIX has been around, we still get questions all the time from people. I'm sure I'll have to look. I'm sure we got some over the past week as well. Here's what VIX did, and my options didn't do that, and they still don't understand the difference between the cash and the futures, which are the actual underlying. So you're kind of eliminating that little step of abstraction. It seems like with these people, they can look at SPY, they know where SPY is trading, and the options and the volatility should cue off that. So was that part of the goals as well, to maybe simplify the process a little bit?
Absolutely, and in fact, that's actually there was a slight unintended byproduct, and that is that it just so happens that SPY is probably the best known product out there. It's the most actively traded security on the planet. It makes sense to have a volatility index that's tied to something that it's ubiquitously known. So that's definitely an advantage.
So you won't get hit up with all those people saying, how come SPY moved this much and my options didn't, I have this delta, how come it didn't move commensurately, which we still get so often. I'm going to send those to you now from VIX. You can answer those for me, which will be nice. But, it's interesting to see kind of how this is all unfolding in the marketplace. You mentioned earlier about the methodology. I kind of want to go back to that a little. You don't have to go too deep in the weeds if you don't want to, but I'm just kind of curious. You said the methodology is similar, but with the market dragging concept, I believe you referred to it, to kind of help with those fast market movements. But of course, we know there's been a lot of changes to VIX over the years. They moved it from the OEX to the SPX. It went from just front month at the money to now kind of incorporating the put wing and the call wing. So the skew is a component of that. They've added recently kind of more of like the weekly futures into that calculation. We'll try to make it move a little bit more in line. So I'm curious, what portions of that methodology are you guys using? Like, for example, does spikes include the skew, or is it just at the money vol?
No, it definitely includes the skew. That's because you need to have this. That's what is part of the variance formula. So you need to include pretty much everything in the distribution. However, there are limits to that. So what we do is we truncate at consecutive 5-cent bids, whereas the CBOE's VIX truncates at consecutive 0 bids. Now, we took that step deliberately because, as we know, recently there's been some very negative spotlight on potential people messing with the settlement process. And so by eliminating some of those really teeny options, you eliminate or you reduce the potential for people to put in distorted prices into the settlement. And that's a really critical factor.
So you somehow foresaw my next question. I don't know how you were able to do that, Simon. It seems so outlandish. But you're right. That's good. Obviously, any new VIX, any new entrant to the volatility space, that's the first question the regulators, the customers are going to say is, wait a minute, is this suspect to the same allegations of manipulation? Obviously nothing's proven yet with VIX land over there, but the same allegations of manipulation with the put wing. It sounds like you guys have taken steps specifically to avoid it.
Well, yeah, that is one step, but there are more. I think the key differentiator here for us is the fact that SPY is listed on every exchange. So in our auction, essentially all 15 options exchanges can contribute to the auction. So whereas the VIX is kind of a small and closed system, ours is open to anybody, essentially. So if someone were to be a nefarious actor and try and push up the price of low delta puts, then those puts would be cheaper on all the other exchanges, so we will effectively have the weight of arbitrage of the entire market into our settlement process.
So you're relying on ARB a little bit to keep things a little bit fairer playing field. Because you're right, people are putting bids in worthless things. People will oblige them and sell them to them.
Exactly.
And
yes.
And so I'm glad to hear you say that about the skew, because I was always a proponent of that. I think you're right. I think there is valuable information in there. When they made that change to the VIX, I thought that was a good thing. Some people took the other side of that, and I understand why. And we're seeing new products out there in the space that are trying to go back to old school VIX, which is VIX effectively without the skew. And I still think there's value in there. But you're right. You have to be careful in how you're doing it. And it's a shame it took this long for the CBOE to try to address some of these allegations that have been floating around for the better part of a decade now. But they are taking some steps to improve transparency. So hopefully that will maybe mitigate some of these issues. But it's in the lawyer's hands now, which is never a good scenario at the end of the day. So it sounds like with these changes, you guys think you can avoid those issues and maybe capture some of that mind share that VIX may have lost.
Yeah, certainly. I think it makes it far more difficult to do anything dodgy, for want of a better word, in the settlement process by virtue of the fact that there's so many people involved. And SPY is ubiquitously traded and the bid-offer spread is tighter. All these things sort of play to that.
Now, obviously, I'm looking at it here, and we're just looking at kind of the disseminated index now. There's no volume. Is there any, maybe, Shelly, is there any update in terms of when we can get some approval, when we can get our hands on spikes?
It's a great question. The regulatory...
That's where I get the big bucks, sir.
The regulatory approval occurred on Friday. The SEC approved the rule on Friday.
Congratulations. You're official.
Thank you. We are official. We expect to begin trading the options and spikes hopefully late November is our target. We've got a few more things to get done on the exchange side. We have a software rollout occurring in mid-November. It expands our risk protections to single-list products. One of the things we're well known for in the industry is our extensive risk protections for both market makers and order flow providers. A lot of those rely on an NBBO, and a proprietary product, you don't have an NBBO. So those changes are coming out mid-month. In addition, we made some changes to the opening auction to support the settlement for the product. That goes to the ability for anyone to participate. As Simon was saying, we'll have a completely open and transparent auction process, as well as very open and transparent data post-auction, so people can forensically look and see how things settled and why they settled the way they did.
Another issue, right, with the kind of opaque auction process with the special opening quotation, everything that goes on with VIX. You're right, there's been a lot of issues with seeing when the imbalances are setting up and who's doing what out there. They're, again, trying to make some changes to that now. Would have been nice to see that probably a few years ago, but still, you're right. So I'm curious, Shelly, you probably were very involved with the approval process. We hear a lot from people dealing with the SEC right now. The SEC is very much in a no frame of mind, particularly for anything in the vol space. Given what happened in February, they're very reluctant to approve new vol products. Were some of the measures we talked about here, like taking into account the skew and the market dragging things, were those instrumental in getting the SEC to say yes? And because I know you guys have been tilting at this windmill for some time. What do you think was it that finally got them around to approving it?
Well, I think it's a combination of things. The product is, as Simon said, is very similar to VIX. The improvements that were made reduced the opportunity for people to try to do something that otherwise they shouldn't do in the marketplace. We certainly don't think that the CBOE or the traders at CBOE have done anything wrong. The imbalances are part of the normal process of laying off risk for expiring futures. That being said, anything we could do to help clarify what's going on in the marketplace and allow additional folks to participate, we were up for. The SEC appreciated that. They understood the truncation reduces the probability of anybody being able to game the settlement, and the surveillances we have in place, as well as the extensive systems we have in place, helped comfort the SEC that this would be a viable product that shouldn't introduce any new problems to the marketplace.
Speaking of the marketplace there, one of the issues we see with a lot of new products, that we see a lot of things launched that have a lot of promise, and for whatever reason, the liquidity provider community doesn't get behind them. Have you been out there doing the roadshow, and what's been the response from the market maker community? Are they excited? Are they ready to get out there on day one and start posting bids and offers here for spikes?
The market maker community seems very interested in the product. As Simon said, there's interest in the market for competition, and that competition can both be in options pricing. We think with an all-electronic marketplace, we don't have a trading floor like the CBOE does. This will be an all-electronic marketplace. All the liquidity will be on the screen. So we think that's an advantage, and the market makers like that. The market makers like the systems we have at MIAX, both the speed and the risk protections. There's a lot of interest from the market makers also due to pricing. We expect to be very competitively priced relative to the CBOE proprietary products. And we think the competition is healthy, but we also believe this isn't a situation where we're trying to steal a piece of the pie from CBOE. We think having multiple products will allow more volume to trade in both products. There'll be an arbitrage between them. There are some slight differences that will allow arbitrage opportunities for the market makers. Market maker community is looking for additional things to trade, and they seem to be very excited about the product.
Speaking of excitement, Simon, how excited are you? I know you've been working on this. I've been familiar with the spikes for multiple incarnations, first at BATS and then at MIAX. Obviously, you've been working on it longer than that. So how excited are you to finally see your baby, your creation, kind of come to fruition here?
It's fantastic. It's beyond words because, this has been a 4-year investment in time and energy and resources, and I truly believe in it, which is why I stuck to it. For me, at the time, it was a devastating blow when SIBO bought BATS and basically nixed the first version of it. But it did.
That's why they bought BATS, right? Of course, was just to kill spikes. That's what everyone said. Everyone has told me they were so scared of spikes they bought an entire exchange group just to shut it down. So you should be proud. They were very scared.
Yes, well, I have heard that. I've heard that comment made, but I'm not so sure that that's actually true. But whatever the case was, it was certainly like getting sand in your eyes. So I had to start again. But ultimately, we've ended up partnering with the MIAX exchange, and it's been fantastic. They're really motivated. The technology is awesome. I couldn't be happier. So it's a delay, but it's all good.
I'm excited to hear that. I'm excited that you got the approval. I know we've been talking about it for a while, so I'm glad to finally see it hitting the marketplace, and we're looking forward to that. Before we wrap up really quickly, Shelly, we just had your buddy Eric Cotton here a little while ago. He's telling me about a big financial advisor education event you guys are doing with OIC. If you want to give our audience maybe a little bit of an overview of what you're doing with Eric and why that audience is so important to MIAX as well, the asset manager and advisor audience.
It'll be coordinated with the Options Industry Conference, which occurs in May of next year. The MIAX family of exchanges is the sponsor this year. We enjoy working with Eric and his team with all users of the products. But the advisor community needs to be well-versed in what is happening in the industry, both new products, innovation at the exchanges. They're one of the sources of liquidity for all these products, and anything we can do to help educate that group, as well as any constituency group, is good for the industry. It's not just good for MIAX, it's good for the entire industry.
We're definitely on board that train. We've been talking to advisors here for a long time, so we're glad to see that audience is continuing to grow here for the option space. Well, Simon and Shelly, I'm glad we can get you in. Certainly good timing, not just with the approval, but a little bit of volatility in the marketplace, so it makes it fun to talk about volatility. I'm looking forward to seeing this product launch, and then maybe Simon will have to get you back on maybe our Volatility View show where we go really deep into the weeds about volatility products. I think, Shelly, you've been on before. We'll have to get you on. Once it's launched, we can see how it's playing out in the marketplace. We can talk about some of the different nuances that I'm sure will be unfolding as the product hits the marketplace, because it always happens. So we'll have to look forward to that. And congratulations again, and we'll look forward to how this is playing out in the marketplace in the coming months.
Thank you. Sounds great.
Thank you, Mark.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.